Welcome to What the FICC, where we cover fixed income, commodities, and currencies. My name is Culley, and today it's all about U.S. interest rates. Now, for the past year, the focus has been on the dollar and rates. They've been rising together, crushing risk assets in the process. But in recent weeks, we've seen the US dollar start to break down, roll over, and violate its year-to-date trend line. The big question is whether or not interest rates would follow. So far, they haven't. Let's check out the chart. The 5, 10, and 30-year yields are all in an uptrend, remain in an uptrend, as their year-to-date trend lines are still valid, still in place. But there's one pivot high that we want to keep our eye on in the coming weeks and months, and that's the June pivot high from earlier this year. You can see it highlighted with that red arrow on each of these charts. The level's basically the same for all three yields. It's around 350. So if and when these yields break down from their year-to-date trend lines, when they violate these trend lines, we want to see the yield drop below those former pivot highs as confirmation. And given, or since it's been the rising rate environment has been global, it hasn't just been isolated to the US, we also want to see confirmation from developed European yields. Here we have a chart of the German, French, and Spanish benchmark yields. Now, they're already back at those pivot highs from earlier this year. Germany found support. France, potential failed breakdown, back above those June pivot highs, while Spain has undercut those highs and is trending lower. So mixed information from European yields, but we imagine that they're all going to move in the same direction, right? These aren't all going to break down and undercut their June pivot lows while US rates continue to rip higher. So we're going to keep an eye on these yields for insight and potential confirmation for the next move in rates. But for now, the trend's higher. All right, thanks for watching. Any questions, reach out at info@allstarcharts. If you enjoyed the video, click the link below, read the article, and you can always follow along at Ian Culley on Twitter. Thanks for watching. See you next time.